Hello and welcome to the Business Strategy Game final presentation of Company B, Velocity Footwear, within the Industry 4 sector. Co-managers consisted of Mr. Kiran Reddy, Mrs. Victoria Reyes, and myself, Cody Hunter. Strategic vision at Velocity Footwear is to provide reliable, sensible shoes for our worldwide customers at an affordable price and become the most profitable shoe company in the world. Velocity Footwear has and will continue to move up within the ranks of the shoe industry through the expansion of products and services, as well as utilizing quality products for our shoes. Velocity Footwear will provide an ethical environment for employees and training for all employees as well. Vision statement here of Velocity Footwear is speeding towards success. Our target market for Velocity Footwear is athletic, the athletic market, primarily running shoes, as you can see by our logo. And we strive for a high quality image within the market, and we're actually able to attain a 100 image rating. Strategy for year 11 within the North American market. We didn't have a great idea of how to separate ourselves in the market. We initially led with just a moderate pricing with a high model availability, or mid to high model availability, as we got a decent feel for the market and see how other competitors branched out. But this lack of competitive advantage really hurt us initially, in being late movers to the industry in the long run. As you can see, many other companies were just in the middle of the pack as well. Very few market leaders, mostly mid to high availability with moderate pricing and quality as well. Some emergent leaders that come up is Island Designs, which is not highlighted by this graph, but they did come out on top in the scoreboard for Y11, and also Alpha Company E, as well. Strategy for Y17 was a little more, we had a little more intent, actually much more intent in this year, as we moved from moderate pricing and mid to high availability, with basically not separating ourselves out, to offering high quality with a very competitive price. And we initially started with a low availability, but we gradually increased that as companies such as Company J aided into our market share. But we offered for the most part, for the remainder of the last several years, we had a 10 SQ rating, and actually offered, our prices were right below average. And the only other companies to offer 9 or 10 star were C and J, and both of their prices were offered at 58 or more, about $4.50 more than we did for the same pricing. As you can tell by the industry condition, that people are really starting to separate themselves from the other groups. There's several that went for a low cost, low quality with a high availability, and really everything in between us and them. Market leaders emerged by separating early to a low quality, low price with high availability, as others tried to catch up. Emergent leaders, L Company probably would have won if they had had more time. They were late movers, really separated themselves out from the rest of the group with a huge Hail Mary by Company A to offer to eat into their market share. They were offering a high price with high quality with low availability, and in Y17 they made a major shift.
Hello, my name is Kiran Reddy. I am with Team B Velocity Footwear, working alongside with team managers Mr. Cody Hunter and Ms. Victoria Reyes. I will be presenting net revenues, prices and SKU ratings, return on equity, stock price. On the net revenues, we did pretty good. Year 10, starting off with 250 million. Year 11, 257, and then the following year we topped at 349 million, and then in year 13 a slight drop to 321 million, and then in year 14 we picked up and we got it up to 456 million, and then in year 15 a slight drop in the revenues, and then for year 16 we did pretty good at 545 million, and finally in year 17 we ended up with 629 million. Overall, Velocity maintained a very healthy trend with a stable year-over-year growth in revenues, and for most part competing in the top three in the net revenues category. Prices and SKU ratings for North America. We had consistent pricing in all the three segments: internet, wholesale, and private label. In the internet segment, the pricing was between $75 and $52 from year 10 to year 17. However, the pricing was a little bit higher at the beginning. We had to lower it and a slightly higher, and then we had to completely lower it down all the way down to be more competitive. And then the SQ rating was pretty consistent with what the investor expectations were in that. And then the wholesale segment pricing was a little bit on the lower end, and then we went a little bit higher towards the middle part, and then we had to decrease it, and slightly fluctuation towards the end. So it was anywhere between $48 and $53.50 between year 10 and year 17. Again, SQ rating was pretty consistent with investor expectations. And finally, the private label segment, the bid price that we had was between $35 and $25 between the years year 10 and 2017. Again, SQ ratings, we met the investor expectations on that front, and we had the stability in the SQ ratings, and we showed an exceptional trend year over year in pricing and product line. Return on equity. Return on equity, we did pretty good, again, meeting and beating, exceeding investors' expectation. Starting out with year 10, 15%, and then we did 17.8% in year 11, and we topped 25.3% in year 12, and then again went down in year 13, but exceeded investor expectations. And similarly, year 14, we did pretty good in the 24%, and then year 15, 21%, and year 16, 15%, and year 17, again, 26%. Overall, we did pretty good meeting and exceeding the investors' expectations in this category as well. Velocity Footwear did a pretty good job with stock price with a consistent year-over-year growth, except a little bit in between. We started off with $30 in year 10, and in year 12 we ended up with $90.11. Somewhat slight dip in year 13, but went back to $129.08 in year 14. And finally in year 17, $147.32. Overall, we met the investors' expectations and exceeded the expectations of investors. And thank you very much.
Strategic planning exercise. Our team's goal for the strategic planning process was really to be realistic in our forecasting. We wanted to continue to meet, if not exceed, the investor performance measurements. We didn't want to be too ambitious in our forecasting or make too risky moves, especially this late in the game. At this point, we were really just trying to hold our number one spot within our industry, and we thought that we might be able to hold this competitive advantage by and increase our performance measurements per year by pricing ourselves lower than our competition across all segments and continuing to utilize better quality materials. Looking at the competition, we weren't the only ones that took this strategy. Many others did very similar and decreased their pricing, and so we had to adapt. And as you can see, the actual scores were not far from our original strategic plan. However, you can see that credit rating, stock prices, as well as EPS did see a little bit of a dip in year 16, and then we were able to make it up in year 17. Overall, our team is very happy about our performance throughout the game, but we do feel that there were some lessons learned, some things that we could have done better, and we'll talk about that later on in the presentation. As I mentioned, there was a lot of competition within our industry. Our company did lead the pack, along with a couple of others, including Island Designs. We felt that Island Designs was one of our biggest competitors. They came in grabbing market share early on within our industry and doing very well within the wholesale segment. That was one segment that we never gained a high competitive advantage in. We did very well and saw a lot of success within online sales and the private label, but Island Designs really dominated that wholesale segment across the board, and they just continued to separate themselves from the competition year after year after year, and we felt that they were our biggest competition within this game. As I mentioned, there were a lot of lessons that we learned. One is that we entered this market not knowing what to expect, and not with the competitive advantage that we needed, especially in the industry that we were in. We were very mellow, and also a little overly optimistic in our projections, especially without establishing that competitive advantage early on. So this led to us playing a little bit of catch up to our competition. We also were pricing our product pretty high without the quality being there. Our SQ rating really didn't match our pricing early on. We should have come in with a low price and maybe gradually match that to our SQ rating. So this really did end up leading to some issues of us overproducing our products and some excess inventory. Another thing that we learned was we needed to be a lot more competitive when bidding for celebrity endorsements. We never had the opportunity to win a contract with a celebrity, and we believe that we could have been that a celebrity would have helped us in, especially the wholesale market, in appealing to our customers and our audience. The companies that did beat us, especially our biggest competition, won some celebrity endorsements. So that's something that we could have been a little bit more competitive on. Lastly, I think that I'm going to refer back to why dominating your category can be a failed strategy, which is one of the articles that we read. The author notes within this article that being number one and number two isn't always a good thing. Managers are focused on market share rather than the category or the industry. And I think that's something that we did. We focused a lot on how to gain more market share. And I think that affected us, especially towards the end, where we lost that competitive advantage and ended up coming up number three. Overall, we are very excited and very happy with our results and our performance, but there's always things that we could have done differently, and we know if we were going to play again, we would win.